Good morning, students. This is CA Pragnesh Kanabar and with another video for revision for CA final audit, and this is audit of NBFC. All right. So this topic is left in option by many students because they do not have a clear idea of how they are supposed to go through this topic. Let me tell you, audit of NBFC, yes, it requires a little bit of self-study. So how you should take the maximum benefit of this video is, you should sit with the notes and the module or whatever notes you have for audit of NBFC, and you should see some part of the video, pause, check by heart, then go ahead. That will be the best way to finish off audit of NBFC right now, along with this video itself for your revision. All right, so this video is being recorded in April 2022, and this is for May and November 22 attempt, just to giving you the date so that you are clear with when this recording is done. So after this, if there are amendments, and if you're watching this video, please consider that. All right, so with respect to audit of NBFC, the very first thing is the definition of NBFC, which is very important. All right, when it comes to NBFC, don't forget that it is a company under Companies Act, but it gets the license under RBI NBFC guidelines, and that is why it can function as a non-banking financial company. All right. Whether all NBFCs require registration or not, we will talk about that. That is what I want to finish off first, definition and registration requirement. So definition of NBFC, a financial institution which is a company. If the company itself is going to work as a financial institution, then RBI says that it covers and it gets covered under our definition. Then RBI says that a non-banking institution which is a company and which has its principal business the receiving of deposits under any scheme of arrangement or lending in any manner. All right. So if you have principal business of receiving deposits, lending in any manner, then in that case they say that, boss, you are an NBFC, and such other NBFCs as may be defined by the RBI in consultation with central government, with prior approval of central government time to time. So this definition itself does not give you full marks. We need to see the 50-50 rule, which actually helps us to find out which companies are NBFC, the 50-50 rule given by RBI, a very, very important point for the case study. So this is what you need to know as finance students. In order to identify a particular company as NBFC, it will consider both assets and income pattern as evidence from the last audited balance sheet. So if you want to know whether a company is NBFC or not, first sit with the last audited balance sheet of the company to decide its principal business. Now the company will be treated as NBFC when a company's financial assets constitute more than 50% of total assets. So financial asset more than 50% of total assets. However, total assets, in the figure of total assets, it will be net of intangible assets. It will be net of intangible assets. Now, what is financial asset? Loan given, loan or advances in the nature of loan, investments made. These are financial assets. All right. So when financial assets constitute more than 50% of total assets, netted off by intangible assets, and income from financial asset is more than 50% of the total income. If the company fulfills both the criteria, that is the asset criteria and the income criteria, in that case the company will qualify as NBFC and would be required to be registered as NBFC by RBI. All right. Yes. Okay. So this, why it is so important in your MCQ case study based, because, boss, this straight away gets connected with Caro 2020. Under Caro 2020, you are supposed to comment whether the company is NBFC or not, and if yes, whether the company is supposed to obtain registration and whether they have obtained the registration and it fulfills the requirement of net owned funds. So basically, this can be one of their favorite for integrated case study based MCQ. This paragraph extremely important. I am moving ahead with my discussion. Now, once the company is, is under the definition of NBFC, it needs to get registered with RBI. So let us talk first about registration. So there are three things that, in the initial part of NBFC you should be very clear, no matter under whichever professor you have studied or whatever notes you are referring. One is definition, another one is registration, and third one is net owned fund requirement. Just go slowly with my video, everything is clear. We are done with definition. Now let us talk about registration. So obviously, if you are covered under the definition of NBFC, you need to get registration issued by RBI. When I'm talking about registration, Do not think about the net owned fund requirement of that NBFC. All right. Now, when it comes to registration, RBI has exempted some companies from registration. Yes, RBI has exempted some companies from registration. My sequence is little different, but I will end up covering the whole module. All right. Why some companies have been exempted from registration? If you see, even insurance companies, even their financial assets are more than 50% of total assets, and their income from financial asset is more than 50% of total income. So in that case, what, insurance company should get license from RBI? No, no, it will get registration from IRDA. So stockbroking companies, merchant banking companies, alternative investments, investment funds pulled from the private investors and stuff to invest in various asset class. You talk about housing finance institutions. You talk about Nidhi company, which is regulated by MCA. So in order to avoid duality of regulations, so the NBFCs which are regulated by other regulators were given specific exemptions. All right, and that is what you can see. This list you have to buy out. But if you remember one thing, that was if the companies which are governed by other regulators, even though they fulfill the definition of NBFC, they need not obtain registration. So please do not leave this topic in option. It is very much doable. Look at this. Up till here, this and securitization up till here, because these companies are normally regulated by either by SEBI, IRDA, or by some other specific regulators, Ministry of Corporate Affairs. That is why exempt. Then there are some companies RBI genuinely wants to exempt them, because their operations might not impact the economy too much. So RBI is not in any mood of increasing compliance requirements from them, like microfinance companies, then mortgage guarantee companies, core investment companies. Arey sir, what are these type of companies? Don't worry, I am coming to the type of NBFC, there you will understand. All right. But some companies have been exempted because of they may not have a great impact on the economy, and why to increase unnecessary compliance cost for them. All right. So yes, this can be one of your MCQ. So you can do it. Come on. So I'm done with definition. I'm done with registration requirements also. And I am now going to jump to this discussion of net owned funds. First of all, what is net owned fund of NBFC? Sir, it is not given in the final CA chapter. Then what exactly is covered under net owned fund? What needs to be added? What needs to be subtracted? What needs to be added? What needs to be subtracted for a fund, for owned fund, for net owned fund? Is it just shareholders fund, or can we consider preference capital? Can we consider the debentures, bonds? All right. So what is net owned fund exactly? That is not given in your final CA module. Why they have not given under final CA module? After final CA, though, there is no other level, so where they are going to teach you about this? Listen to me. Hidden adjustment. They have given about net owned fund in your advanced accounts chapter. Yes, that is, I think this is your chapter number 9, as you can see. 9.6 advanced accounting. These are the page numbers. So there they have given about net owned fund requirement. And there they have exactly said which fund is an owned fund, then when, how to calculate net owned fund. For owned fund they have given one illustration, for net owned fund they have given one illustration. All right. So students, these 2-3 pages, if you do it, it is possible they may ask one MCQ of calculating owned fund, net owned fund, and then they will ask you to find out whether this is meeting the minimum requirements of RBI or not. I told you little bit of self-study is involved, but if you sit with a pen and paper today, and if you download these PDFs and do this much work, then along with my video plus 40-50 minutes of your own, and you are done with the complete discussion of NBFC, all right, on your own. See, I cannot in revision video cover every single discussion, but I can always tell you, can give you an overview that how these things are done. So yes, they can ask you a question on how to calculate net owned fund, because they can assume that you are inter CA clear when you're giving final CA paper, and this point can come up from your advanced accounts paper. All right. Okay. Yes, sir. All right. So please go through this. Now, the point is how much net owned fund NBFC needs to maintain. The general requirement is minimum net owned fund of 200 lakhs, that is 2 crores. But let me tell you, based upon types of NBFCs, there are specific requirements also. But to solve your case study based questions at final C level, whatever they have given in test or knowledge question and stuff, 2 crore is something that you need to by heart. So how they can set up a case? Yes, listen to me. Full case study they can set up. First, they will say whether a company is NBFC or not. That you need to find out. So that 50-50 rule knowledge. Then they will give you the calculation of its, they will give you some items from their balance sheet to find out the calculation of net owned fund. Then they will ask you to verify whether the company is fulfilling the net owned fund requirement or not. All right. And then they will ask you as an auditor, what is your duty? Do you have a duty to, comment in Caro 2020 about the registration and net owned fund requirements? So please understand, you may lose out on some really important marks. So do not leave this topic in option. It is very much doable. Pause the video right now. Look at the point of definition, registration, net owned fund, and finish off the instructions that I've given. That's it. All right. And then we move ahead in the discussion. All right. So now I will be just simply discussing about types of NBFCs. I will be discussing about types of NBFCs. Now it was very shocking for me that why they have given such a short discussion for types of NBFCs. In inter-CA level, I teach audit and not accounts, right? So I was not aware about this point that in inter-CA advanced accounts in chapter number 9 in theory pages, they have explained types of NBFCs in detail, and that is why in your final CA module they have shortened the discussion. And in final CA module, they have just given one line that students may refer different types of NBFCs as given in CA Intermediate Paper 5 Advanced Accounting Study Material. Now, I don't think that they will ask a very detailed question from types of NBFCs because they think that they have already covered that at Inter-CA. So why to question the same thing at Final CA? At Inter-CA, whatever was not covered, mostly those things we are seeing in the question bank. All right. But still, we cannot take them for granted. So what you're supposed to do, please understand now. Whenever I talk about type of NBFC, see a particular NBFC, it needs to be seen from three angles. Like how I can see you from three angles. A particular NBFC is to be seen from three angles. One is liability based classification. That means whether NBFC is allowed to accept deposits or it is not accepting deposits. So D and ND. So one is liability based classification. Most of the NBFCs are not allowed to accept deposits. All right. Only some NBFCs are allowed to accept deposits. That depends upon whether RBI will allow you to do that or not. Then asset-based classification. Asset-based classification, if the NBFC's asset size is, total asset as per last audited balance sheet, if it is 500 crore or more, then it can be systemically important NBFC. Means for the economic system, a little important NBFC, where asset size is 500 crore or more, and other NBFCs where asset size is less than 500 crore will be non-systemically important. All right. So this is based upon the asset. Then based upon the activities of NBFC. Based upon the activities of NBFC, that means, okay, whether NBFC will accept deposit or not, liability based classification. D, then accepting deposit. If NBFC writes ND against its name, then not accepting deposits. Asset based classification, 500 crores or more asset size as per the last audited balance sheet, then systemically important, otherwise non-systemically important. Then activity based classification, then the major activity that it is invested into, for example giving major loans to infrastructure projects, then it could be an infrastructure NBFC. All right, infrastructure loan NBFC. So for this activity based classification, they have just given names of NBFCs based upon their activities. Investment and credit company, it could be deposit taking, it could be non-deposit taking. Infrastructure finance company, systemically important core investment company. Infrastructure debt fund NBFC. Then NBFC microfinance institution, NBFC factors, non-operative financial holding company. All right. And the details about these different types of NBFCs are given in your inter-CA advanced accounts, and that is why they haven't printed over here. As you can see, these categories of NBFCs registered with RBI. Yeah. Deposit, non-deposit, systemically important, non-systemically important based upon the asset size and by the kind of activities, which they have explained every single activity over here. All right. So I'll just give you a briefing, but if you want to get into details, then you can see this particular PDF, page number 9.7, which is from Inter-CA Advanced Accounts. All right. Investment and credit company, whose major business, when they say principal business, means more than 50% of his assets and more than 50% of its income is from either investments and loan, which normally is a general NBFC kind of category. All right, investment and credit company. Infrastructure finance company, look at this, minimum of 75% of its total assets deployed in infrastructure loans. Then it should have net owned fund of 300 crore or above. I told you, all right, that there are separate net owned fund requirements also. And look at this, it is non-deposit taking. So listen to me. For every NBFC, check three things. LAA. What is the condition of the liability? That means whether it can accept deposits or not. Then is there any requirement of asset size? All right. And then what is the, when it will be called as infrastructure finance? That means activity. When that activity will be considered as a major activity. All right. Now, if you see non-deposit taking, correct. So this is their liability based classification. They are NDs. They are not taking deposits. Correct. They have minimum of 75% of total assets deployed in infrastructure loans. Only then it will be considered as infrastructure finance. So this is, they have defined the activity over here. They have defined the activity over here. This is their registration requirement. Correct. And then there are these other requirements which they are giving over here, that it should have minimum credit rating A. Then minimum capital CRAR, it should have 15%. We will talk about CRAR, don't worry. There's a separate discussion that is coming for CRAR. But then accordingly they have given all the requirements over here. Now, systemically important core investment company. What is core investment company? Reliance Group has one company which will invest only in Reliance Securities, and it will give loans to Reliance Group only. Correct. So a company which is, which has deployed more than 90% of its total assets in a particular group, either in the form of investments or in the form of loans or debentures, but 90% of its net assets have been deployed in a particular group. All right. Then they have given further requirements, how much should be equity exposure, how much should be debt exposure. If you want, you can go through these requirements. Frankly speaking, not required to go through every single requirement. One thing that you should be aware of is that a core investment company, what is a core investment company? Tell me. Yes, they have deployed 90% of its assets, at least 90% of its assets into one single group. Now, core investment company, if it has total assets of greater than equal to 100 crore, then it is treated as systemically important. Oh, normally all other NBFCs, when they have total assets of 500 crore or more, treated as systemically important. However, for core investment company, total assets of 100 crore or more, treated as systemically important. Now, why I said that this particular discussion turns out to be important for you? Because in your module there are some, sorry, there are some specific discussions that they have given. Look at this. They say that some of the core investment companies are exempt. Now, which core investment companies are exempt? Core investment company which is not a systemically important core investment company. Oh, so core investment company which has asset size of less than 100 crore is not supposed to be registered with RBI. Even if it has greater than equal to rupees 100 crore asset size. Let us say even if it is systemically important, but not accessing public funds, that means not taking deposits, correct? So they are also exempt from registration. Now this is only these selected lines they have printed over here from inter-CA books. So at least for those lines, I want you to be very clear. All right. The types of companies over here. So you look at this. I'm just giving types of NBFCs fast briefing so that at least you are aware that, okay, these are different types of NBFCs given in your inter-CA advanced accounts book. Infrastructure debt fund, a fund set up to get the money from the public and then divert it to infrastructure projects. So it is similarly like a mutual fund, as if you're investing in some debt fund. All right. But it is separately, governed by RBI. Non-banking financial company, microfinance institution. Microfinance institutions are such institutions. First of all, they are exempt from registration requirement. As you would have seen, it is covered under the exemption list over here. So microfinance companies, microfinance institutions are such institutions that they do not accept deposit and they give major loans to the rural borrowers or semi-urban borrowers also. All right. Major borrower, and they have defined who will be rural borrowers, semi-urban borrowers, basically to give loans to the class of the country, where the loans are not being usually given, correct? That is why microfinance institutions are exempt from lots of compliance requirements, all right, because they are doing a great job of giving loans to such people who are not considered for giving loans. Then NBFC factors. Factoring. What is NBFC factor? Engaged in the principal business of factoring. All right. That means buying the receivables from someone and then, obviously making money out of that. So I will buy your receivables at a discounted price and I will make money out of that. That if that is my major business, then I'm into NBFC factors. Non-operative financial holding company. Array, these big groups, they have one company which will just do the work of holding other companies, and that particular company itself will not be an operating financial company. All right. So for example, today, if Reliance wants to open a bank, then Reliance will create NOFHC, non-operative financial holding company, and through this it will hold the shares in the bank. Correct. This NOFHC will then hold the shares in some other Reliance Finance companies. So Reliance Bank, Reliance Finance companies, there the shareholding is of this NOFHC. This NOFHC itself is not doing any other business. All right. Just has been created as a separate company to hold other companies. Correct. And then whatever is not getting covered in these definitions, they have given a separate residuary non-banking company. Through any scheme, if the company is accepting deposits and lending in any manner which is not covered by the definitions, then it is a residuary non-banking company. All right. Yes, sir. Yes, sir. So, yes, I understand that, I cannot take all the detailed discussions of every single type of company over here. But listen to me, it's not even required that you should by heart every single condition. Relax. Just that, you should know that this is there in your inter-CA advanced accounts, and you should know at least basically the functioning of these companies. All right. So that is it for your types of NBFCs. Now, difference between banks and NBFCs. Look at this. You know that NBFCs cannot accept demand deposits. You can't have current account, saving account over there. However, some NBFCs which are allowed to accept public deposits can accept long-term term deposits. All right, but they cannot accept demand deposits. NBFCs do not form part of payment and settlement system. You don't have a checkbook of NBFC. Then NBFCs are not guaranteed. The deposits that you have in NBFC are not guaranteed by DICGC. That is why you get a higher rate of interest when you have deposits with NBFC. Then in case of bank, there is something called as, priority sector lending, which is not there in case of NBFCs. That means they are not mandated to lend to a particular sector of economy compulsorily. Correct. So one point is on this priority sector lending. One point is on S for settlement. Then one point is on A for accepting the, sorry, this one. One point is on assurance. Then D, deposits. All right. So SAD priority. That is what I say when it comes to difference between banks and NBFC. So if they want, they can put it up. All right. So listen to me. My first part was completely on definition, registration, and NOF requirement. There, I think you should spend some more time. Second one is on types of NBFC. Now they have themselves not given everything in final CA module because they have it in your, inter CA module advanced account. So I don't think that there will be a detailed question from types of NBFCs. All right, because in old course every single type of NBFC was explained in the module, final CA module, but in new course, since they have put that particular part at inter CA, I think it will be questioned at inter CA advanced accounts, but it will not be put up as a separate question maybe at final CA level. Just to be safe and just to make you feel better, I showed you. If you have time, you can go through it, otherwise it is okay, you can skip that particular part. But do remember the definition, registration, and net owned fund requirements nicely. That owned fund, net owned fund calculation, you can do it from your inter CA advanced accounts module also. All right. Then this difference between bank and NBFC and stuff, very simple question. Till here we have reached. Now we are moving to prudential norms. What is prudential norms? RBI guidelines for income recognition, asset classification, and minimum capital to be maintained by NBFCs. After prudential norms are over, then we have some audit procedures and auditors report requirement, and then we are done. All right. Yes, sir. Okay. So first let me discuss about capital requirements. Now they have given the norms, RBI has given the guidelines that NBFC, how much minimum capital it needs to maintain. Minimum capital, how much that NBFC needs to maintain. All right. For that, the first thing that you should notice is none of these. All right. The first thing that you should notice is this table. So what RBI has done is that based upon the risk involved, RBI has given weightage to every single asset based upon the risk involved. Now, even if NBFC has 100 crores of cash and bank balance, but the risk is zero in that, so into 0%, it will be 0 rupees. All right. However, if look at this, FD, certificate of deposits, bonds of public finance institution, if it is of 200 crores, then into 100%, all right, it will be treated as 200 crores. So asset multiplied by its risk weightage, all right, then you get over here RWA, the risk weighted amount of the asset, the risk weighted amount of the asset. So the total of that amount, all right, this I had done in my regular course discussion. The total of that amount, the total of risk weighted assets amount, this let us say is your X figure. All right. The total of risk-weighted assets and risk-adjusted value of off-balance sheet items, technically what we call it as. Let us say that is X amount. All right. Now look at this, everyone. They want NBFCs to maintain 15% of its aggregate risk-weighted assets on balance sheet and of risk-adjusted value of off-balance sheet items. So minimum capital should be 15% of the aggregated risk-weighted assets. As per the guidelines given by the RBI, the assets are multiplied by the risk, and then we came to that calculation. Now listen to me more carefully. This requirement of 50%, 15%, whatever I'm discussing over here, is only for such NBFCs which are accepting deposits, so NBFC D or NBFC not accepting deposits, but they are systemically important. Please understand, RBI will be worried about which NBFCs more, which are accepting deposits or which are not accepting deposits, but they are systemically important. All right. For them, they need to maintain minimum capital as 15% of the aggregated risk-weighted assets. The kind of questions that I'm expecting is, I think they will give you the asset and the risk also, and then they may ask you to calculate. All right. Now listen to me. Minimum capital 15% of aggregate of risk-weighted assets. But what is this minimum capital? It is an addition of tier 1 and tier 2 capital. In audit of banks, you will find the discussion of what is tier 1 and tier 2 capital. I'll be very quick. Tier 1 is your pure shareholders funds, your equity and the shareholders funds, free reserves, which is 100% available to the company for absorption of losses. Whereas tier 2 is such a capital where there are some obligations, it could be long-term debentures and stuff, where there are obligations or capital reserves, where there are obligations against that particular capital and it is not fully available to the company. All right. So tier 1, tier 2 capital. Both of them taken together, it should be at least 15% of aggregated risk-weighted assets. But yes, tier 1 is more important capital. So they say that tier 1 should be greater than equal to 10%. So out of this 15%, greater than equal to 10% should be tier 1. Look at this. This is all we are discussing for these NBFCs. That is why they call them as applicable NBFC, applicable NBFC. All right. So it should be 10%, tier 1. But if you are NBFC into gold jewelry, NBFC into lending against gold jewelry, all right, then your minimum tier 1 should be greater than equal to 12%. That means only the balance 3% or so can be tier 2. All right. So over here. So don't get confused or irritated. You need to have the willpower to get through this topic. All right, that's it. So everyone, then they've explained what is this risk-weighted assets and stuff, which I just explained it to you in short. So give me a confirmation. Yes, just give me a heart-to-heart confirmation. Although this is a recorded video, but I will get it. That at least you are going to do this capital requirement properly. Yes, yes. Okay. Now let us talk about asset provisioning, asset requirement. All right. We are now going to talk about asset classification. So you know that all the loans, advances that are given, they could be either standard asset or it could be NPA. Standard asset or it could be NPA, correct? What is a non-performing asset in case of bank? Overdue more than 90 days. Overdue more than 90 days. Now listen to me. NBFC D and NBFC not accepting deposits but systemically important, correct? So NBFC accepting deposits and NBFC not accepting deposits but systemically important, they are almost treated like banks. That is why in their case, if the overdue amount, if it is overdue for 3 months or more, if the installments are overdue for 3 months or more, then the assets are treated as non-performing assets, very much similar to bank, very much similar to bank. However, other NBFCs, I am talking about NBFC NSIND. Look at this. No one is worried about them. Non-systemically important, not accepting deposits. All right. For such NBFCs, the period is different. For such NBFC, the period is different. For them, for them, look at this. They have given a different period of non-performing asset. They have given so many discussions, over here. Non-performing asset 6 months or more. So overdue 6 months or more, it becomes non-performing asset for them. Yes, yes. Wait, wait, wait. Look at this. There's so many discussions that game. However, for lease rental and hire purchase installments, 12 months or more. So remember, general rule non-performing asset for I'm now discussing for NBFC, NBFC, NSI, ND. General rule overdue 6 months or more. Lease rental, hire purchase installments 12 months or more. You can't buy out everything. I'm giving you the main takeaways from here. However, if the question is about NBFC D accepting deposits or NBFC not accepting deposit but systemically important, for them that overdue installment 3 months or more continues to remain the same. So don't end up reading everything over here. It is not required. Yes, yes, yes. Now tell me, in case of banks, let me draw a line for banks. All right. In case of banks, once the asset is classified as NPA, it moves into which category? Substandard category. So NPA for 12 months, it remains as a substandard asset. After that, it moves into doubtful category. All right. Then doubtful up to 1 year. Doubtful 1 to 3 years. And doubtful more than 3 years. Yes. This remains the same. This whole discussion remains the same for NBFC. After doubtful more than 3 years, it goes to loss asset. But this whole discussion remains the same for NBFC D, that is accepting deposits, and NBFC NSI and D. No, 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 no. NBFC SIND. Ah. See, now you are correcting me. Systemically important, not accepting deposits. So because these are treated like banks, these are treated like banks. Yes, sir. Yes, sir. Yes, sir. Now relax. However, for these chin to NBFCs, NBFCs chin to NBFCs, call them as chin to NBFCs. NBFCs non-systemically important, not accepting deposits. They have a different line. All right. So over here, let us say for them, we classify it as NPA. First of all, NPA itself is overdue 6 months or more. General installments and lease rental hire purchase installments overdue 12 months or more. We classify them as NPA. Then from here till here, all right, 18 months of NPA. Then they are called as, till 18 months of NPA, they are called as substandard asset. After that, they are called as doubtful asset. Then doubtful 1 year, 1 to 3 years, and more than 3 years. All right. So this is the difference. This point is for chain to NBFCs, NBFC, NSI, ND. So I will say that I will request, please remember everything for NBFC, NSI, ND. Otherwise, for NBFC D or NBFC, NDSI, all right, things remain similar to banks. We are talking about asset classification. So one, when an asset is classified as NPA, different for NBFC, NSI, ND only. 6 months or more, general installments, lease rental, hire purchase, 12 months or more. Yes, sir. Yes, sir. However, substandard asset, it is 18 months of NPA remains as substandard asset. This is all for NBFC, NSI, ND. Doubtful up to 1 year, 1 to 3 year, more than 3 years. Actually, it's very difficult to cover whole NBFC in a revision style, but yes, I have taken this promise that I'm going to do it, and I will make it look manageable for you from the module, to give that feeling that yes, we are covering the module. Okay, so done up till here. Otherwise, for NBFC T, NBFC ND, SI, similar to banks, even classification of NPA or classification into substandard doubtful loss asset. I am talking about asset classification. I am talking about asset classification. When we talk about asset provisioning part, that is a little different. What is the provisioning in case of banks? Substandard asset 15%, secured, unsecured 25%. Then you have doubtful 1 year, doubtful up to 1 year, 1 to 3 years, more than 3 years. Basically, please compare it, with audit of banks over here. For asset provisioning, every applicable NBFC, once the asset is classified as substandard, what they are supposed to create a provision, that is for every applicable NBFC. All right. except NBFC MFIs. Are microfinance institution, they are to exempt from registration requirement also. They keep on saying this except NBFC MFI everywhere. Look at this. I don't give importance to that. When you are not covering them in your registration requirements, then what is the issue? All right. Now listen to me. Loss asset 100%. That is same as in case of banks. Doubtful up to 1 year 20, 1 to 3 years 30, and more than 3 years 50%. My God, this is for secured. Huh? Doubtful unsecured 100%. Substandard asset over here it is 10% in case of banks. Yes, 15%. Standard asset provisioning. Standard asset provisioning for every applicable NBFC 0.25%. 0.25%. No, it is for non-systemically important non-deposit taking NBFC. NSIND standard asset 0.25%. Otherwise, it is 0.4%. 0.4% is very much similar to banks. Now, which NBFCs are almost treated like banks? NBFCD or NBFC SIND. By this time, you will be irritated that yes, sir, we know this now. So 0.4% for NBFC SIND, NBFCD also, NBFCD also 0.4%. NBFC NSIND we have 0.25% over here. Yes, sir. Yes, sir. Yes, sir. So you can either cover it straight away from the module, or if you want, I will upload the notes also for this in my revision material. I mean, in my study material section of the app itself, where you are seeing this particular video. But every single paragraph from here is not required to be read. So we have covered two things. One is capital requirements, another one is asset classification. Pause this, revise it, and then go ahead. All right. Now let me talk about income recognition. All right. Income recognition, normal accrual basis income is recognized. However, if the asset is declared as NPA, then similar to bank, very much similar to bank. If asset is declared as NPA, then whatever income has been booked but not realized must be fully provided for. All right. So you know that when asset is booked as NPA, there are two impact. One is income recognition, one is asset provisioning. Asset provisioning and classification we had to go in detail. Income recognition principles, no matter whichever subject you are learning, or whichever entity you are reading across the world, it is going to remain the same because it is basic accounting principles. Yes, yes, sir, yes, sir. All right. So this is it for the whole prudential norms discussion. All right, provisioning requirements and stuff. All right. Now we are coming to the last part, and that is the audit procedural part. Listen to me. Wait. First, definition, registration, NOF. Very sensitive. Very sensitive. Second, types of NBFCs, little less sensitive because it is covered in detail at inter-C level. Difference between bank and NBFC was important. Third, yes, this capital requirements, asset provisioning, income requirements, RBI prudential norms, very sensitive. And I told you that you can how nicely you can cover it in short. And I think I have simplified that thing for you. Then next, audit procedural part. Audit procedural part, they will appoint you as an auditor of NBFC and they will give you a specific situation. Let us cover it up very quickly. Following are necessary steps. Any NBFC, first you have to understand their business. Look at this. Evaluate their internal control system. Are standards auditing, but don't forget registration with RBI. Now you know what are the registration requirements. You can show off now. Minimum net owned fund it should have of 2 crore. Yeah, bro. I know this. All right. And they are talking too much over here, but that's okay. Then for NBFCs which are accepting public deposits, these are unique points. For NBFCs which are accepting public deposits, there are public deposit directions of RBI which need to be complied with. All right. Now be very careful. What are those public deposit directions of RBI that need to be complied with? Yeah, I will talk about it. I will talk about it very quickly now. All right. Now, NBFCs which are accepting public deposits, they accept public deposits based upon a credit rating. So there is this full discussion of credit rating. Now, when they accept more than the credit rating, correct, then that is not good. That is violation of the public deposit directions. So full audit of credit rating you have to write whether it has been done from a registered agency or not and stuff. This can be a separate MCQ question. Be careful. Only this unique point. Be careful if it is NBF, if you are conducting NBFCs which are holding public deposits. Ascertaining the business, evaluating internal control system, registration requirement, those will be common points that you will be checking. But for NBFCs which are holding public deposits, there will be a separate point that you will write on credit rating, and we are discussing that point. Come on, don't lose the hope. Don't lose hope. You can finish off this topic. In the event of downgrading of credit rating below minimum specified investment grade, let me explain you very quickly. There is a minimum credit rating. that needs to be given to NBFC, that NBFC needs to get from credit rating agencies, even in order to be eligible to accept public deposits, even in order to be eligible to accept public deposits. All right. So this minimum credit rating, if the investments, if the credit rating that is given to the NBFC, if it is below the minimum credit rating, that means it is no more eligible to accept public deposits. Then what will be the obvious outcome? It cannot accept any fresh deposit. Whatever are the existing deposits, that will run off till maturity, because at least those obligations need to be fulfilled. It will stop accepting fresh deposits or renewal. Whatever are existing deposits will run off till maturity, and the position needs to be reported with RBI within 15 days. All right, that what has happened, correct? So these 3 points very important for MCQ part. Okay. Then if you're conducting audit of NBFCs which are holding public deposits, obviously you'll have to test check the interest calculation. Then you'll have to check whether public deposit has been obtained, has been taken only after receiving a form from the depositor. These are all basic points. All right. Then you have to check the deposit register maintained by NBFCs, whether there is a delay default or not. For delay default, there are separate comments required under CARO also. Correct. Okay. Then whatever are the returns to be filed with RBI, whether they have filed it or not. Whether public deposits, whenever you take public deposits, you are supposed to maintain some amount of that public deposit as a separate security. Either you have to invest in government securities or you have to keep it as FDs. These calculations were there at your NBFC inter-CA accounts, but that's okay. The whole calculation is not over here. So whether liquid asset requirement has been maintained or not. All right. Then for NBFCs which are not accepting or holding public deposits, which are not allowed to accept or hold public deposits, whether the company has clearly passed a board resolution restricting all the employees and officers of the company from accepting public deposits. All right. Okay. And that is fine. So these points you have to be careful of. So they can ask you a separate question. You have been appointed as an auditor of NBFC which is accepting public deposits. Please mention the specific points. If they talk about, please mention the specific points. Or if they have given you a specific situation that you are an auditor of NBFCs which are accepting public deposits, then you talk about these points only. Correct. Just one line you remember from other points, or one point, but this credit rating point was very important. If they ask you that you are auditor of NBFC, mention the general procedures, then these head points and little bit of content. Or they may ask you a question on, you have been appointed as auditor of NBFC, please explain how are you going to audit the registration with RBI. Then you show off your knowledge of registration and net on fund requirement. Correct? Yes, yes sir. All right. Now you have been appointed as auditor of NBFC. You need to check whether NBFC has complied with prudential norms or not. Prudential norms means capital, asset, income. So right, whether the company has maintained minimum capital required as per RBI circular, risk-weighted assets and stuff. Then asset, whether classification of asset is proper or not, whether provisioning requirements are proper or not. Correct. You can talk about that. And income recognition, if asset has been classified as NPA, then whether income recognized, income booked but not realized, whether it was fully provided or not. So once you know the concept, what is prudential norms, then you can easily write the points over here. So company will have an internal policy. All right. So look at this, compliance with prudential norms regarding investments. So they have just given list of areas where there are prudential norms. You can write in capital, asset, income, etc. Whether board of directors, whether they have a policy, internal policy or not. Look at this, whether NBFC has complied with prudential norms, standard, substandard, doubtful, all has been classified properly. In respect of NPA, check their P&L accounting and stuff. All right. Then look at this. All accounts which have been classified as NPA in the previous year, whether they are still NPA or if they have been regularized, what are the reasons behind them? Finished. Yes, these are the favorite questions at final CA level. Yes. Normally, I told you they will not ask on types of NBFCs too much because that has been questioned at inter-CA. Although I showed you the relevant points from inter-CA. Okay, we go ahead now. For NBFC, RBI has issued separate directions to the auditor that what kind of frauds you are supposed to focus upon and what kind of frauds are supposed to be reported to Department of Non-Banking Supervision, which is a separate department of RBI which looks after NBFCs. But they have not printed that whole circular. So which type of frauds to focus upon, which type of frauds need to be reported, they have not printed that whole circular over here. All right. So you can see this classification of frauds by NBFC. They have just given one part of the circular that as per that RBI master directions, how they have asked NBFCs to classify their frauds. All right. So look at this. Misappropriation and criminal breach of trust. Yes, you have to write it in the same manner. Multiple times asked, one of their favorite question. Misappropriation, criminal breach of trust. Then fraudulent encashment through forged instruments, unauthorized credit facilities. Forge fake documents given an encashment done, unauthorized credit facilities granted by officers for illegal gratification, and for negligence and cash shortages. This cash shortage I want to discuss. Give me 5 minutes. Then look at this CIA. C for cheating, forgery. I for irregularities in foreign exchange transaction at financial level. You understand this? A, any other type of fraud which is not coming under above heads. So I am having fun at CIA. I'm having fun at CIA, but you have to remember it in this manner only. Now let us talk about this cash shortage. What is cash shortage? When the existing cash as on a day, it does not tally with the books of accounts, the recorded cash. That means this is the suspense account. Now, for a cash shortage to be called as a fraud, it may not be always a fraud, right? It is possible that the errors could be unintentional. But then NBFCs will not report the fraud to RBI saying that, hello, it was unintentional. So RBI has defined the limit for cash shortage. They say that if such a suspense account gets created, and if the amount is greater than equal to rupees 10,000, then such instance must be reported to RBI. Yes, of more than 10,000. All right, so more than 10,000, I'm so sorry, not greater than equal to, more than rupees 10,000. It should be reported to RBI. However, if it is less than equal to rupees 10,000, then in that case, don't report to RBI. No, wait. They have divided it into two parts. They have said if it is greater than rupees 5,000, less than equal to rupees 5,000. Less than equal to rupees 5,000, don't report to RBI. Not required to report to RBI. But if it is greater than rupees 5,000, it needs to be checked. Who reported this fraud? If the cashier himself reported the fraud to the senior management or to the auditors, that means the cashier is honest. Then don't report it to RBI. But if the cashier did not report this, that means fraudulent intention has been established. Then greater than rupees 5,000 also needs to be reported to RBI. Greater than 10,000, automatically all cases need to be reported. But for greater than 5,000 and up to 10,000, all right, they are asking you to analyze whether the cashier has reported it or not. All right. So cases of cash shortages more than rupees 10,000 and cash shortage more than 5,000 if detected by management, auditor, inspecting officer and not reported on the occurrence by persons handling cash. Yes, yes, sir. Yes, sir. In earlier module, they had given the full timeline of which fraud needs to be reported when, but that they have not given, so you can thank the institute later on for that. All right. And then you have this audit checklist. This is the general audit checklist of NBFCs, NBFC ICC. ICC is all general NBFCs, yeah, who are into mixed portfolio of investments and giving loans. All right. So how will you verify loans given by someone? Talk about documents, internal control, accounting system, valuation. Investments, talk about documents, internal control, accounting system, valuation. So you can anyways create 8 to 10 points. This is just a read once list. Do not get too much sensitive about this list. All right. Okay. You can read once and write on your own. Even if this question is of 4 marks, 5 marks, they will deduct 1.5 mark for sure, no matter how nicely you have written it, because these are standard deductions in such kind of answers. All right. Okay. On the other side, brighter side, you can score 2.5 easily. Now listen to me very carefully. The most ignored part by the student. You see this auditor's duty? Yes? Yes. Now wait. Oh my God. It goes on and on and on and on and on. It goes on and on and on and on and on. It goes on and on. All right. Now this has been discussed very nicely by me in a particular session. So I will just attach a video of that particular session over here. All right. But if you listen to me carefully, this can be done nicely. Right? But if you do not listen to me, then there is an issue. All right. Then you will be able to do it with that video itself. Okay. If you listen to me properly. Otherwise, don't try to skip this. There are 2 to 3 module questions on this. All right. Very, very sensitive, this particular point. But you can do it in short and nicely you can do it. Now, then there is this point of, yes, compliance with CARO 2020. We have these clauses, whether during their company has made investments, clause 3 we have. Then whether company is required to be registered, yes, we have clause 16 and stuff in CARO. So CARO 2020, these discussions are there in CARO. Anyways, for CARO, there is a separate video itself. And for CARO, I don't want May 22 students and stuff for whom these videos are being shot. All right. I don't want them to adopt a shortcut for CARO. They should do these things in detail. All right. Only then you will get some benefit over there. Okay. And after that, yes, applicability of Ind AS. This is given in your FR paper. Ind AS applicability for NBFC, do it properly. Yes, for banks, Ind AS are still being deferred, but for NBFC it is there. So please ensure that you do this from your FR paper. By heart this. And then you have division 3 of schedule 3. That means a separate format for NBFC. How NBFCs are supposed to prepare their financial statements and how it is different from normal Ind AS format. Correct. That is one of their favorite question. ये तो फिर भी ठीक है. But the major difference is normally when students go through these pages, they are like, okay, chapter is done now. But over here, this is one of their favorite for exams. But this is accounting points, so obviously I'm not covering it up over here. So please go through these two things. All right. So as I told you, my video plus 40-45 minutes of self study, and you will be done with this particular topic. All right. Just you will get that point of auditor's duty, those reporting requirements. Now you will see that clip that I will attach over here. Okay, that's it then. Thank you so much. Compliance with NBFC auditors report. RBI directions. Yes, what is this? Let me tell you that RBI has given directions and they have given separate matters upon which auditor needs to conduct inquiry and make a report on that. Yes, they have given full-fledged circular only for the auditor. They have said, hey auditor, conduct inquiries on these points and report it to the management. I mean, include it in your audit report and give it to the management. All right. So this reporting requirement that we are going to study, it is in addition to section 143 of Companies Act. Arey, why there is a reference of Companies Act over here? Arey, why? NBFC is a company registered under Companies Act. Hello. So obviously, whatever a company audit report or company's auditor report, whatever he has to do, that needs to be done. In addition to that, this is an additional reporting requirement. Am I clear with this? And hello, let me tell you, this is not included in our audit report. This is a separate report. We'll submit it along with our audit report, but this is a separate report, which is given to the board of directors of NBFC. This is not a report given to RBI. This is a separate report given to the board of directors of NBFC. And all of a sudden, the person who was drafting the module felt that let us print the bare circular as it is. This is bigger than Caro. Look at this. Full bare circular as it is. Till here it continues. And it's not like in every attempt they ask questions from this. Once in 5 or 6 attempts, you may find a question on this. Are you getting my point? From this particular point. Last, though, I don't remember. I think November 16 or 17, somewhere they asked. Okay. So what I have done is, then leave it in option. No, wait. What I have done is, I have printed a condensed form of this circular. Actually, means you have deleted points? No, the same points I have printed. But in some keywords and broadly, as if students need to remember this. All right. So I have analyzed every single line, and from that I have translated that into a shorter phrase, and I have printed it over here. Because if question is asked from these clauses, and in the question bank in module question bank there is a question on this clause, so it's not like they're ignoring this. Correct. So if a question is asked on these clauses, at least you should be in a position to write it. Are you getting my point? So I will cover it smartly in a shorter time, but ensure that at least you are not filtering further than this. Are you getting my point? So you'll be like, let me make short notes out of Sir's short notes. Then it will be shorter. I mean, the shortest notes that you have invented, maybe. All right. So it will don't create summaries of summaries. There are few things where I've printed summaries. You don't create summaries of summaries. All right. Over here, 8.3 matters to be included in such report. What is this? That we forgot. This is a separate report given to the board of directors. Auditor must conduct inquiry on these matters. Now they have divided this circular into 3 parts. One is auditors of all NBFCs. What are the points that on which they need to conduct inquiry? Then second, if you are conducting audit of such NBFCs which are accepting public deposits, then as an auditor, what kind of inquiries you need to conduct? and what kind of comments are required in this separate report. Obviously, highest number of clauses are over here. Why? Because NBFCs which are accepting public deposits, they will be much more regulated, no? All right. Okay. Then NBFCs not accepting public deposits, there are some points that we need to check. Yes, sir. So everyone over here. In case of all NBFCs, first, RBI will be worried about whether the company has obtained a certificate of vitamin D. अरे certificate of registration ना यार. और क्या टेंशन होगा आरबीआई को? Next, whether that company is entitled to continue to hold such certificate of registration. This is basic question that RBI will be worried for all NBFCs. Correct. Whether you're accepting deposit, not accepting deposits, RBI will be worried about registration requirement. Whether the company is meeting the required net owned fund requirements. So, curly bracket, COR and NOF. At least remember these two phrases. For all NBFCs, certificate of registration and net owned fund requirement. Stay connected. Stay connected. All right. Now listen to me. Listen to me. Why I am teaching these points? Let me introduce one repeatedly asked examination question. So on all of these clauses, auditor needs to conduct inquiry for as per their category. For all NBFCs, NBFC accepting public deposits and the other NBFCs not accepting public deposits. Wait. After conducting inquiry, auditor has to prepare a separate report giving his comments. Correct. That report will be given to the board of directors. Yes, sir. But if there is any negative remark, qualification, reservation, adverse remark, then it also needs to be reported to RBI. So I am repeating. For all the NBFCs, these 3 clauses. For public deposit NBFCs, these 12 clauses. And for not accepting deposits, these 5 clauses. Auditor needs to conduct inquiry, prepare a report, table that report in front of the board of directors. However, for all the points wherever there are negative remarks, auditor needs to prepare a separate exception report. Auditor needs to prepare a separate exception report. And that exception report will be given to the board of directors and it will also be sent to the Department of Non-Banking Supervision of RBI. Am I clear with this? Yes. Yes, sir. So read this 8.4. That 8.3 is pending, but I want to introduce 8.4 now so that you become more serious when you are reading 8.3. Look at this. Where in auditor's report, the statement regarding any of the items above is unfavorable or qualified. Negative remarks. All right. Then auditor should provide the reasons for the same and he should make a report of such qualified remarks non-compliance to the concerned RO. RO Kent RO. No, regional office of the Department of Non-Banking Supervision of RBI. All right. The duty of the auditor for reporting to RBI shall be to report only the contraventions, only the exceptions. All right. And such report shall not contain any statement with respect to compliance. Don't waste the time of RBI office. They want to focus only on exceptions wherever things are going wrong. Am I clear with this? Yes. This has been asked multiple times in exams. This knowledge that you should have. All right. In old course, there were some theory questions asked. Please mention that please explain the duty of exception reporting to RBI. Only one line question. Now the new course, they have this whole story, then they give the question and stuff. All right. But you should remember this. Now wait. Let me connect the dots so that you feel the benefit of attending a lecture in a focused manner. Yeah, we want to feel the benefit. Show us the benefit. All right. This question of net owned fund, which I showed you earlier. Yes, I'm coming back to that question. 10. Abhimanyu Finance Limited is NBFC and it was in the business of accepting public deposits and giving loans since 2015. The company has net owned fund of 1 crore 50 lakhs and was not having registration certificate and applied for that in 2021. One is there will be a negative comment in Caro for sure, correct? Because in Caro we are supposed to comment upon this. But that chalo, Caro chodo. Caro Maro we will do later on. All right. But Advise the auditor with reference to audit procedures to be taken and reporting requirements on the same. Tell me something. As an auditor, I am supposed to at least now conduct an inquiry. You saw that in our textbook that RBI has put a duty on us to conduct an inquiry on certificate of registration and net owned fund requirement. Yes or no, sir? Yes, sir. So I have to conduct an inquiry. Now they are not maintaining net owned funds and they are also not complying with registration requirement. So can I say there will be a negative report? There will be an exception report? Yes or no, sir? Yes, sir. Exception report will go to the board of directors and also to the RBI. Plus there will be a negative comment in Caro. All right. So that is why that certificate of registration and net owned fund requirements are very important. Are you getting my point? Because they can be connected with multiple discussions over here. They have said, if I am the paper setter, what I would have done in this particular question, listen to me. Hey, we don't want to listen to you. See, you block me later on, but at least now listen to me. I wouldn't have given this phrase only. This is wrong. Why are they giving hints to the students? Please mention the procedures and reporting requirements. All right. Now it becomes a good question. So student has to sit and think, reporting requirements. Everyone will write about Caro because Caro is famous topic, no? And all YouTube professors also give videos on Caro. All right. Caro is very famous. Telegram channel, everywhere you will find Caro. So Caro clause everyone will remember. But rarely some students will remember that there is a separate circular by RBI on which we need to conduct inquiries and we need to give an exception report to RBI because that is also one of your reporting requirements. Am I clear with this? Yes, yes, sir. Yes, sir. Yes, sir. Okay. That is why you are studying this. So before you decide to leave this topic in option, be careful. 8.3. I am now at least you will study these matters with some interest that why are you reading this? All right. So in case of all NBFCs, don't forget RBI wants us to conduct an inquiry on COR and net owned funds. Yes, sir. This is much sensitive that NBFC accepting public deposit, all the clauses are not that sensitive. In case of NBFCs accepting public deposits, there are 12 inquiries to be made. First inquiry, whether PD is accepted. What is PDs? Public deposits. Or plus public unsecured NCDs, borrowings from shareholders, borrowings not excluded from the definition of PD. Basically, they are talking about all the public deposits. Is within the admissible limit. Just circle one word, limit. RBI always prescribes the limits up to which maximum NBFC can accept public deposits. All right. So on the left hand side, please write down the word limit. All right. Next, whether the excess public deposits above permissible limits have been regularized as per RBI norms. If excess public deposits have been taken, RBI has asked them that how things can be regularized. Basically, see, I'll tell you, they have not printed everything. They say circular de diya. NBFCs are allowed to accept public deposits based upon their total assets and their net worth. Are you getting my point? So if they accept excess public deposits, they are either supposed to refund it or ensure that they maintain their assets and net worth in such a manner that it fulfills the ratio. Understood this? So basically, if there is any excess, whether it has been regularized as per RBI norms. So what about excess regularization? Excess regularization. So if there is anything above the limit, it needs to be regularized. You know what? If NBFCs want to accept public deposits, they need to have some minimum credit rating, investment credit rating and stuff. They need to get this credit rating done from credit rating agencies. And there is a minimum credit rating ratio also of investment, but I will not say that. No, say it is B plus, no, or A plus. I don't want to get into that. If I write anything over here, you will unnecessarily vomit that. So you should know that there is 1 point on credit rating. Say, but is it given in the module? Arey no re papa. 1 point on credit rating. Next. Ikrar hua ikrar. Ikrar, hello. Capital risk adequacy ratio. Remember that CRAR? Yeah. Hello. What is the CRAR for NBFC, NDSI and NBFCD? Come on, tell me. 15%. And minimum tier 1 capital 10%. For gold jewelry, 12%. Yes, tier 1. So they can question you over here. See how dots are getting connected. Okay, so CRAR. Next, whether NBFC is referred in clause 3, sorry. Minimum credit rating, I told you. Whether credit rating is in force, see, there are basically 2-3 points on credit rating. That is how we should remember. So whether they have got the credit rating, whether credit rating is in force. As per the credit rating, their limits are fixed. As per credit rating, their total assets, net worth, all right. So whether PD has accepted, PD means public deposit, has exceeded the amount approved by credit rating agencies. It should not exceed the amount approved by credit rating agencies. So again, points on credit rating. Next, whether there is any violation of any restriction placed on acceptance of public deposit as per RBI directions. Basically, there is one point on whether the company has complied with RBI guidelines or not. All right. And RBI may put some specific restrictions on some NBFCs regarding acceptance of public deposits. All right. So RBI guidelines. Whether the company has defaulted, one point on default. Anyways, if the company has defaulted, there is a comment in Caro also for this defaults. Yes, sir. Whether the company has complied with prudential norms, income asset classification of NPA. So tell me, this whole over here, whatever clauses you are studying is for NBFCs accepting public deposits. So tell me, if NBFC accepting public deposits, hello, if it has not classified an asset which is overdue for more than 3 months as NPA, then can I say it has violated the norms? Yes or no, sir? Yes or no, sir? मैं लाइट पड़ेगा सिर पे पड़ेगा, जल्दी जवाब दो, मैं पढ़ देगा. All right. Okay. So, of course it has violated, because for NBFC accepting public deposits, if the installment remains overdue for 3 months or more, they need to classify it as NPA. All right. Yes. Now, if it has not classified it as NPA, then it has violated the prudential norms. Understood? Yes. So in that case, as an auditor, you will have to give a negative report over here. And since it is an exception, it will also be reported to RBI. Yes, sir. That is why all of that was important. Now the students who did not focus earlier would be regretting that this whole chapter is bloody connected. So income, asset, income, NPA, capital, all prudential norms. Next, whether the company has complied with liquid assets requirement. Yes, there are minimum liquid assets to be maintained, but don't worry, all that ratios are not printed. Just that someone felt, let us print the whole circular without any background in the module, so they printed it. So liquid assets requirement as prescribed by RBI. So just underline these liquid assets. And communicated the details of the bank where designated securities are held. Basically, wherever they have bought the designated securities, I'll tell you what are liquid assets: gold, cash, government securities. All right, these are all liquid assets. So NBFC needs to have some amount of liquid assets with them. It is very much similar to that CRR, SLR kind of requirements. So they need to have some amount of liquid assets with them. Now, for government securities, NBFCs would have, bought the government securities through some bank, or they would have kept their designated securities with the bank. So that is why those details are required. Basically, full clause is about liquid asset maintenance. Yes, sir. Then NBFCs accepting public deposits, they need to file a regulatory return containing details on how many deposits they have accepted with RBI. Then they have to file a quarterly return, quarterly details of prudential norms compliance with RBI. Then if they have opened or closed new branches accepting public deposits, then in that case also the question is whether RBI norms have been complied or not. So these two details about regulatory returns. Regulatory returns. And last point is about branches. I don't want you to remember every single word over here, but at least these, these broadly these points, okay, that these points are asked over here. Even if you recollect, forget about the clause number and stuff. Even if you recollect that yes, there are such reporting requirements, then it will help you a lot. Okay. Next, in case of NBFCs not accepting public deposits, they are worried about, first of all, the board of directors should have passed a resolution for non-acceptance of any public deposits. The company should pass a resolution so that every single employee officers, they are aware that they are not supposed to accept public deposits. Next, whether the company has accepted any public deposit during the relevant year. They are not supposed to accept, no. We are talking about this circular, this particular 5 set of clauses is for such NBFCs which are not supposed to accept deposits. So first, they should have a board resolution. Then they are saying that, hello, please check, is there any PD accepted? Because they should not accept PD. Then whether they have complied with prudential norms. See, even for NBFCs not accepting deposits, hello, let us say NBFC NSI, sorry, let us say NBFC SI, not accepting deposits. Even this company is important, correct? Even this company is important. So obviously they'll be worried about that. Okay. So that is why this separate set of clauses came up. Whether NBFC NDSI, please cancel this NBFC D. For specifically, they're asking for NBFC NDSI, systemically important. Even they need to maintain CRAR of 15%, no? Even they need to maintain CRAR of 15%, no? Yes or no, sir? हेलो, मेरे को रिप्लाई, मैं प्लास्टिक खा जाएगा, रिप्लाई करो. All right. Next. With your non-replies, now I'm getting suicidal tendencies. Okay. Next. For NBFC NDSI, annual statement of capital funds and risk exposures submitted to RBI. They have to basically give this annual return. That is okay, not a problem. Whether NBFC has been correctly classified as NBFC MFI. If there is any MFI, microfinance institution, they are just asking that please check whether it has been properly classified as such. Now, for NBFCs, look at this last category, fourth category. I said that circular is into 3 categories. Actually, it is into 4, but 3 you need to remember. Fourth category, for NBFCs which are not required to hold certificate of registration, their auditors need to check that whether they are complying with the exemption conditions or not. Because if they are exempt, then there are some conditions, correct? Then whether they are exempt from those, whether they are complying with those conditions or not. Because if they violate those conditions, then they will have to go for registration. Yes, sir. Yes, sir. Very good. So please be careful with this whole point. Yes, sir. All right. Now look at the 9th point. Audit procedures. Audit procedures. There is a separate section, there is a separate paragraph created in the module, a separate section discussion, where there's given about audit procedures. As an auditor, what kind of procedures you will perform? First, as an auditor, how will you verify the registration compliance by NBFC? Okay, then why you have not given answer? Cheater, give us refund. Wait, I said refer point number 2 over here. You know what are registration requirements when NBFC is supposed to get registration. So as an auditor over here, you have to just write check whether, check whether, check whether, check whether. Check whether their financial assets, check whether their in total financial income is more than 50% of the total income. All right. Check whether they have obtained duly, a proper registration from RBI. Check whether they are maintaining net owned fund requirements of 2 crores. Check whether, check whether, check whether. Check whether such NBFC is exempt or not. Check whether, check whether, check whether. And am I clear with this? Yes. So that same point which you understood earlier, you have to write it like a checklist. When I'm going to end the lectures, I get a faster reply. I think there's some connection over there. We want to go, yaar, yes पे time pass करता है, जल्दी बोलना. 9.2, verifying compliance with prudential norms. Compliance with prudential norms, income, asset, classification, that capital, income, asset, capital, prudential norms. Yes. सर व्हेन वी ट्रैवल इन रेलवे ट्रेन ऐसा ही सिंग बेचने को आता है, इनकम, असेट, कैपिटल. ओके, so look at this. Check compliance with prudential norms covering income, asset, capital, etc. Right? There are lots of prudential norms circular given by RBI, but your module is talking about income, asset, and capital. All right. So you just write 2-3 examples of prudential norms: income recognition, asset classification, capital adequacy norms, etc. All right. Now, as an auditor, how will I check the compliance? I should check whether the NBFC has some kind of internal policy for granting loans. Correct? Whether they have some array, basically whether they are classifying assets as NPA properly, asset classification, income recognition, capital adequacy. So one point I'll write on asset, then second point I'll write on NPA and stuff, then one point I will write on whether they are maintaining adequate capital. One point I will write on income recognition, that if an asset is classified as NPA, then the income booked but not realized must be fully provided for, and further income should be recognized on receipt basis. 2-3 points I will write like this. I'll get my 4 marks. I will come back. All right. That is how your approach should be in such kind of audit checklist answers. Am I clear with this? Hello? Yes, yes, sir. Reply. Okay. Next, 9.3. This they have asked multiple times, compliance with prudential norms. And I'm shocked to see that students were getting 0 out of 4. Why? They were not aware about this word prudential norm. So students ko pata hi nahi tha that they were supposed to write on this income, NP and capital. Otherwise, they would have scored 4 on 4. Next, 9.3, verifying compliance with acceptance of public deposit directions. I can't do this in short. All right, just put a question mark. So I'm not completing the whole topic as of now, but let me just finish off what can be done. 9.4, general points for auditing NBFC. Oh, bhai, listen to me. They said general points for auditing NBFC. Now NBFC, what is their business? They give loans, they invest, all right, or so many things that they do. No, then in that case, just keep on writing. Imagine if you're conducting audit of NBFC which has made some investments, verification of investment. If they have physical securities, verify physically, evaluation of investment, then whether investments were done with proper approval, authorization or not. Done. NBFC is giving loan, verification of loan documents, loan authorization, loan sanctioning, then the recoverability of that loan. You can go on and on. Hello, because now you know NBFC business. That is why I have positioned this point as the last point. Understood this? So that after discussing banks and NBFC, if students can't write on audit of investments and audit of loans given, correct, then I should stop teaching. Forget about you stop learning. I should stop teaching. All right. So you can easily write this, not a problem at all. Yes, yes, sir. Just put it under read once category. Yes, Shambhavi, dividend interest and stuff. Yes. Then there are few clauses of CARO which are connected with NBFC, so that I will discuss along with CARO. All right. Okay. NBFC topic is not over. I need to give finishing touches to this topic, and I need to discuss the question bank also. All right, which I'll continue further in the next lecture.